Silver is cheap. And again, I've thought that for a long time, and it's been cheap for a long time. I mean, if you look at the gold-silver ratio, silver is cheap relative to gold. And so the price of silver has got to go up. I mean, there's nothing guaranteed in life, but to me, this is about as close as you're going to get. Silver prices are going to go up, right? Silver was $50 in 1980. How many things could you buy today for less than they cost in 1980? I mean, other than electronics, right? Like a television or something, but a commodity? I mean, silver is a bargain. You got to buy it. I mean, I've been talking about it for years. I remember when silver was under $5, under $4, when the century started. So it's been going up, but it was so cheap, in 2000, 2001, with $4 or $5. Gold was under $300 an ounce. Gold has gone up more than 10x so far this century. It's almost, not quite 10, but nine times. The Dow is only up a little over 4 times. The Dow was about 10,000. Now it's a little over 40,000. So in terms of gold, the Dow has actually gone down. But it's still, I think, expensive relative to gold if you take a broader historic look at it. So the stock market is expensive. What's also cheap is oil. Oil prices are very cheap. You can get almost 40 barrels of oil for an ounce of gold. That is historically cheap. That means that oil prices are not going to stay at this level. They are going up. And that is bad news for the CPI, because it's going to weigh heavily into headline CPI. But all this, I think, is going to occur against the backdrop of a U.S. recession, which means real interest rates plunge even more than nominal rates. We go back to quantitative easing, and that's going to send gold and silver to new highs. So, where does inflation come from? It comes from the Federal Reserve monetizing government debt. Well, government deficits have never been this large, and so we're going to have more inflation than ever before. Just a question of when does the Fed go back to QE, and I think it happens early next year. The rate cuts are just the beginning. The QE is the next part, because the Fed wants to get long-term interest rates back down. It wants to help the housing market. Well, just cutting short rates isn't going to do that. In fact, long-term rates are likely to rise despite these rate cuts because they are inflationary, and the Fed does not control the long end of the curve, which has to price in the higher inflation that results from the easier monetary policy. So I think at some point, the Fed is going to go back to QE in order to artificially suppress the longer end of the curve, because it can print money and buy those bonds to push down the yield. But that's just even more inflation. And so it's coming. And again, the politicians are not leveling with the public. They're saying we don't have to have any cuts to government spending. We can get all the Social Security we were promised. In fact, we can get more. Donald Trump says, hey, we're not even going to tax your Social Security benefits. So we're going to get more Social Security benefits. We're going to have lower taxes. Well, that means we're going to have higher inflation, because we have to pay for government somehow. And it's clear the only way politicians are willing to charge us for government is through inflation, because then they can blame it on somebody else. They don't have to accept the responsibility because they didn't physically take our money. They just took our purchasing power by creating money, and now they can blame it on, greedy businessmen or Putin or speculators or whoever is the scapegoat of choice, but they won't accept responsibility. So we're going to have a lot more inflation. I do think that the Fed's rate cut cycle is going to get aborted before they get back down to zero. I don't know that they'll make it all the way back down, because I think that the foreign exchange markets may not cooperate, and we could go into a free fall with the dollar. Inflation could really start to get out of control, and so the Fed may have to start hiking rates in order to stop it.
Silver is cheap. Let's not sugarcoat it. For years, it's been relatively undervalued, especially when compared to gold. You look at the gold-silver ratio, and it's clear as day. Silver is historically inexpensive, and its price has to go up. We're not talking about speculation here. We're talking about what seems to be an inevitability. When you look at the long-term trends in silver, it's pretty evident that its price has been lagging behind, despite its essential role in various industries and financial markets. Silver was trading at $50 an ounce back in 1980. Now ask yourself, what else can you buy today for less than its price 40 plus years ago? Not much, right? Except maybe some outdated electronics, but those don't count. For a commodity that has intrinsic value, $50 in 1980 should have logically translated into a significantly higher price today. But here we are in 2024, and silver is still below that $50 mark. One thing to think about: commodities like silver don't lose value over time. Unlike a new phone or TV that depreciates the moment you take it out of the box, precious metals hold their worth. Silver is no exception, and this is where things get interesting for you as an investor. For years, silver has been trading at bargain prices. Peter Schiff, yes, the same guy who predicted the 2008 financial crisis, has been saying it for decades: silver is cheap. And you know what? He's right. Remember the year 2000? Silver was trading at under $5 per ounce. Gold, too, was under $300 per ounce. Since then, gold has skyrocketed to over $2,000 per ounce, roughly a 10 times increase. The Dow has quadrupled in value during the same period, going from around 10,000 to over 40,000 today. But silver, it hasn't seen nearly the same growth, even though its intrinsic value and industrial demand have surged. This lag in silver's price movement is one of the biggest disconnects in the financial markets today. Peter Schiff's point is that this is the perfect opportunity for investors. In fact, compared to gold, silver is drastically undervalued. If you look at historical trends, silver has often traded at a much narrower ratio compared to gold, often around 15 to 1. Today, that ratio hovers somewhere around 80 to 1. That's a staggering discrepancy and an opportunity staring you in the face. Inflation isn't just a scary word, it's reality. We've already seen it creep into everything from groceries to gas, and it's only getting worse. As Peter Schiff points out, inflation comes from one place: the Federal Reserve printing money to cover government debt. It's like trying to patch a leaky boat with duct tape. It might work for a while, but sooner or later, the boat's going down. Now here's where silver and gold come in. Precious metals are historically one of the best hedges against inflation. As governments print more money and devalue their currencies, the intrinsic value of hard assets like silver and gold only increases. You're not betting on silver's price going up. You're betting on the dollar's purchasing power going down. It's an entirely different game. As Schiff explains, in the early days of the US, you could buy an ounce of gold for around $20. That same ounce of gold today costs over $2,000. But it's not that gold has gotten more valuable. It's that the dollar has lost its purchasing power. The same logic applies to silver. Right now, the price of silver is artificially low, but it won't stay that way forever. At some point, the scales will tip, and silver's price will reflect its true value. One of the biggest factors driving the undervaluation of silver is the strength of the US dollar. But that's not going to last. Schiff and other analysts have been sounding the alarm for years about the dollar's inevitable decline, and we're already seeing signs of it. The BRICS nations, Brazil, Russia, India, China, and South Africa, are building an alternative monetary system that could supplant the US dollar as the world's reserve currency. Once that happens, the dollar's days of dominance are numbered. And guess what happens when the dollar weakens? The price of precious metals, particularly silver, skyrockets. It's simple economics. When the dollar loses value, it takes more dollars to buy the same amount of silver. Schiff has pointed out that foreign central banks in the BRICS nations are already buying up massive amounts of gold and silver, positioning themselves for the day when the dollar crashes. Americans, on the other hand, are selling their gold and silver. Why? Because they're not seeing the bigger picture. As Schiff has pointed out, the US government and the Federal Reserve have lulled the public into a false sense of security. People believe the stock market will keep going up and the dollar will remain strong. But history tells a different story.
The BRIC nations are, basically building a new monetary system, brick by brick. But it's going to happen. I mean, they're going to supplant the dollar. It's only a question of when, not a question of if. The timetable, I think, was accelerated by the Biden administration's sanctions against Russia, which really was a wake-up call to the world that you need to get out of the dollar, that you're too vulnerable you're basically beholden to the whim of the United States to impose sanctions on you if they don't like something that you've done. That should be particularly problematic for the Chinese, because we're constantly criticizing the Chinese. It doesn't make sense for them to put themselves in this position. So obviously, they're going to be moving away from the dollar. That's why the price of gold keeps hitting new record highs, even though American citizens have been selling their gold all year. So have a lot of other Europeans. It's foreign central banks and people in the BRIC countries that have been buying the gold that Americans have been selling. They're doing it for a reason. They're going to keep on buying it. The price is going to keep rising. Eventually, the American investors who sold their gold are going to try to buy it back. Of course, it's going to cost a lot more money. And people who never bought any gold are going to start buying gold. And so then, the prices are going to start to move up much faster. So far, it's been a very slow, orderly ascent. There's been a lot of doubters, a lot of naysayers. The gold stocks, the silver stocks, are dragged behind very reluctantly. Every once in a while, they make new highs, but then they get clobbered the minute gold goes down $50. It's like, oh my God, this is it. It's going to crash. But once we really get, north of 3,000, 4,000, who knows, you're not going to have all that negativity surrounding the gold bull market. People are going to accept that gold prices are going up. And it's really not gold prices going up, it's the value of the dollar and other fiat currencies going down. When our republic was formed in 1789, you only needed $20 to buy an ounce of gold. When we formed the Federal Reserve, well over 100 years later, in 1913, you only needed $20 to buy an ounce of gold. And even as late as 1970, you only needed $35 to buy an ounce of gold. Now you need $2,600. It's not because gold has changed. It's exactly the same. It's the dollar that's changed. It's worth a lot less because we have so many more of them in circulation relative to how much gold we have. And the rate at which dollars are created is going to increase exponentially in the years ahead. And so gold prices are going to go parabolic.
Silver is poised for a breakthrough that could far exceed the expectations of many investors. The convergence of several powerful factors is setting the stage for what might be the most dramatic surge in silver prices in recent history. Peter Schiff's argument for silver is compelling, but when you dig deeper into the underlying forces, it becomes evident that this is more than just a temporary price shift. It's the beginning of a paradigm shift in the way silver is valued. One of the primary reasons silver is set for a major price increase is its growing industrial demand, particularly in sectors that are expanding rapidly, such as renewable energy and electric vehicles, EVs. Silver plays a vital role in these technologies, especially in solar energy. It's estimated that 20% of all global silver consumption is now linked to the production of photovoltaic cells used in solar panels, and this percentage is expected to grow. The global push toward clean energy is not slowing down. Countries worldwide are adopting policies aimed at reducing carbon emissions, and renewable energy, especially solar power, is a cornerstone of these plans. According to the International Energy Agency, IEA, solar energy is expected to become the largest source of electricity generation by 2050. This demand surge will increase the consumption of silver as it's a critical component in photovoltaic technology. Silver's high conductivity and corrosion resistance make it irreplaceable in solar panels, where it is used in the form of a paste for solar cells. As governments push for green energy and companies race to build out their renewable energy infrastructure, the demand for silver will be driven to new heights. The question is, will the supply be able to keep up? While solar energy is a massive driver of silver demand, the electric vehicle, EV revolution is another key piece of the puzzle. As the world shifts away from fossil fuels, electric vehicles are becoming a dominant force in the automotive industry. Major car manufacturers, including Tesla, Volkswagen, and General Motors, are all ramping up their EV production, and with it comes a growing demand for silver. Electric vehicles require more silver than traditional internal combustion engine vehicles. Silver is used extensively in EVs' electrical systems and batteries. In fact, silver's high conductivity makes it an essential component in EV batteries and charging infrastructure. With the number of electric vehicles on the road expected to increase exponentially in the coming decades, the need for silver in this sector is only going to grow. A report from the Silver Institute highlights that by 2025, silver demand from the automotive sector could increase by as much as 50%, largely due to the electrification of vehicles. By 2030, electric vehicles are expected to account for over half of all new car sales globally. This means silver, as a critical component, will continue to be in high demand, potentially outpacing supply. While demand for silver is skyrocketing, supply is facing significant challenges. Unlike gold, which is often hoarded in large quantities and doesn't get used up, silver is both an investment asset and an industrial commodity. A large portion of the silver produced each year is consumed in manufacturing processes, leaving less available for investors. As industries like solar energy and EVs consume more silver, the supply available for investment purposes shrinks even further. Moreover, new silver discoveries are becoming rarer, and many existing mines are reaching the end of their productive life. Some of the largest silver mines in the world have seen production decline in recent years, with few major new deposits being discovered. This is partly because silver is often mined as a byproduct of other metals like copper, lead, and zinc, meaning silver production is largely dependent on the economics of mining those other metals. The diminishing returns from existing silver mines, coupled with increasing costs of production, mean that the supply side of the equation is under significant pressure. In a world where demand is rising sharply and supply is constrained, basic economics tells us that prices must go up. We can't talk about silver without addressing the elephant in the room: inflation. Peter Schiff has long warned about the inflationary consequences of the Federal Reserve's policies, and we're already seeing those consequences play out. Inflation has been steadily rising, eating away at the purchasing power of fiat currencies. Governments around the world, particularly in the US, have been printing money at unprecedented rates to cover massive deficits and stimulate their economies in the wake of the COVID-19 pandemic. The result is clear: more dollars chasing the same amount of goods, which drives up prices. As inflation rises, the value of paper money declines. But silver, like gold, is a hedge against inflation. When the value of fiat currencies falls, the value of tangible assets like silver increases. This has been proven time and again throughout history. In a world where governments continue to devalue their currencies through inflationary policies, silver and gold represent safety nets. They're stores of value that hold their purchasing power over time, unlike fiat currencies, which can be printed at will. Another key factor that's likely to drive silver and gold prices higher is the geopolitical landscape. The dominance of the US dollar as the world's reserve currency is being challenged. The BRICS nations, Brazil, Russia, India, China, and South Africa, are actively working to build a new monetary system that bypasses the dollar. This movement has gained significant momentum in recent years, particularly after the US imposed sanctions on Russia in response to its actions in Ukraine. Those sanctions were a wake-up call for many countries. They realized that by relying on the dollar, they were leaving themselves vulnerable to the political whims of the United States. For countries like China, which has been increasingly at odds with the US, this is a particularly troubling situation. The BRICS nations have started to take steps to reduce their dependence on the dollar, including increasing their gold reserves and exploring the creation of a new international reserve currency. This move away from the dollar could have profound implications for silver and gold prices. As central banks around the world shift their reserves out of dollars and into hard assets like gold and silver, demand for these metals will increase. And as the dollar's dominance wanes, the value of precious metals will rise in response. Given all these factors, rising industrial demand, supply constraints, inflation, and geopolitical risks, silver is in a prime position for a massive price breakout. Historically, silver has been undervalued for extended periods before experiencing sudden, sharp price increases. We saw this in 1980 when silver spiked to $50 per ounce, and again in 2011 when it reached nearly the same level. Both of those price spikes were driven by a combination of factors similar to those we're seeing today: inflation, geopolitical instability, and rising demand for silver in industry. But what makes the current situation even more compelling is the sheer scale of the demand that's coming from the green energy and EV revolutions. The silver market today is much more intertwined with industrial use than it was in the past, which means the forces driving demand are much stronger. In conclusion, the perfect storm is brewing for silver: rising industrial demand, shrinking supply, Inflationary pressures and geopolitical risks are all converging to create an environment where silver prices are likely to surge. Investors who recognize this opportunity now could be in for significant gains in the years ahead. Peter Schiff's warnings about inflation and the undervaluation of silver should not be taken lightly. The writing is on the wall. Silver is cheap, but it won't stay that way for long. If you're looking for a way to protect your wealth and profit from the coming economic shifts, silver is a compelling choice. Don't wait for the headlines to confirm what's already happening. The time to act is now. Silver may just be the opportunity of a lifetime.